Housing is a problem everywhere. It's very political in Sydney, planning is very political, whereas rooming houses in Brisbane, it's kind of more streamlined. So no matter what you guys say about how planning is in Queensland, come to Sydney.
Do you feel that there's still a lot of scrutiny in this space?
The councils, because it's so political, they will fight you tooth and nail. They will take you to court. They don't care if they're spending their ratepayer money because...
Michael Lin is a Sydney-based positive cash flow property developer who helps sophisticated investors build profitable property portfolios.
He brings over 17 years of experience in Australian OEM product development and Asian market expansion, specialising in branding and distribution strategies.
The asset has evolved. It's now become an investment stock. We're talking about 30%, 35%, which is pretty decent. The worst case scenario is if you couldn't sell it, you're still getting positive cash flow. So
a lot of people buy a block of land, build a new house, grossing 8% plus. Would you say the capital growth is on par with like the standard, or do you feel...
Capital growth is, it's...
Do you actually feel like the housing crisis is going to get worse moving forward?
I think it will continue to get worse.
Hey everyone, welcome to another episode of the Unemployable podcast. Today we have a property developer that has joined us that has flown all the way to the Gold Coast from Sydney, and he's not just an average property developer. He is literally someone that is having a huge impact on the housing affordability crisis and how to fix this issue. And he's a room housing expert. His name is Michael Lin. Thanks for joining us, Michael.
Thanks guys. Thanks for having me. It's a pleasure.
As usual, Shannon, thank you for being on.
Thanks for having me here. It's always good. Thanks for coming, Michael.
Thanks, man.
And Carson.
Howdy. It's good to be here again.
Good day. So for those of you guys that don't know, just quickly, Shannon and Carson run Unemployable Property. 4 years ago, one was cleaning carpets, the other one was a machine operator, and now they're doing over $100 million worth of land deals here on the Gold Coast and south of Brisbane. Absolute legends. And Michael Lin as well has been very, very active in our Unemployable Property Facebook group. If you're not on that group, make sure you go on it. It's free, and there's so much value that's being added by guys like Michael. He's on it all the time. We actually had a coaching call, and I said, on the coaching call, who knows Michael Lin? And everybody raised their hand. I said, that's exactly right, because he's out there and he's putting out the content and he's getting your attention. And that's what we all need to be doing more. So Michael, some headline numbers for those of you guys that don't know what rooming housing is. Rooming housing basically is one house with multiple rooms that you can rent out individually. And we'll go into more detail on that. Well, Michael has done over 25 of these, which means that they built over 125 rooms, and out of that they own 9, so that he actually owns 45 individual rooms that they are renting out. And we did some calculations off camera on what those rental amounts were, and let me tell you, it is pretty extraordinary the amount of income some of these can actually make. So Michael, Carson and Shannon have always, when they talk about you, they talk about the hustle. Like, you should see the amount of work this guy actually does and how he does it. So explain to us first, like, where does the hustle come from? Where is this rooming housing, you flying to Brisbane and going to Perth and Sydney and all these different things and doing these types of deals?
Well, I see property as a business. That's what it is to me. My family is very entrepreneurial, and saying that they don't, from the optics, don't really look like the typical entrepreneurial type. My dad doesn't really speak very good English. He owed money when he came to New Zealand. I was born in New Zealand. And my mother is illiterate, right? But she's had her own business since she was like 13, years old. She would sell makeups at a stall or something. So I'm quite fortunate that, they've instilled those kind of values in me, that hustle that, you're talking about, that it's really weird because they have those traditional values, traditional migrant values. You got to go to school and do well. I'm the bad Asian who did badly in school, who failed, who got a bad UAI, didn't even get a degree, not even the bare minimum, So, but they still passed on those core values, and that's kind of led me to where I am. So they've led me on this journey in a way, indirectly, not on purpose, but I'm where I am because of them. So yeah, everything I have is because of them, and they still are very involved in everything we do. So our property, we're quite collective in the way we think. The projects that we do, I do a lot with my mum, my dad. And even when I'm doing deals with other people, they always want to hear about it because they're actually excited to hear about the cool things that we're doing. So yeah.
Yeah, cool. What nationality are you?
I'm Chinese.
Chinese.
My mum's Cambodian Chinese, so she's a refugee,
Yeah.
and migrated to New Zealand. And my dad's from mainland China. So yeah,
Amazing, yeah. Like I love the immigrant stories, and it's probably because my parents were immigrants to Canada, and I'm an immigrant to Australia. And it's amazing the hustle that you have to get somewhere when you're in a new country. When you don't know anybody. I knew the language, but imagine, people that come into a country speaking English and they're illiterate in the language, that would be very, very difficult. And I still, to this day, on the podcast and some of the comments, get told to go back home because people don't like some of the stuff that I say, which is quite interesting, But to me, it just fuels me even more. And I'm sure that you guys have gotten, abuse in the past and stuff like that as well. But at the end of the day, it's more of a driver for us than it is anything else. Can you briefly explain what a rooming house is and how it differs from traditional rental properties? Because it's a very unique way of investing.
So a rooming house is an actual building class, right? A 1B building class. You're allowed to have multiple tenants. If you go over 5, then it falls into, say, for example, a boarding house class, which is typically a class 3 build, or, just higher standards. So the reason why we entered into the rooming space was because it's sort of in between. I've always wanted to do multi-rental, right? I'm from Sydney. Housing is a problem everywhere, right? And one of my first projects I want to do was a new generation boarding house in New South Wales. Right? So different states have different terminology, but basically same, right? And it was such a hassle to get there. Not a hassle. It was such a challenge from a planning and legal perspective because it's very political in Sydney. Planning is very political. Whereas rooming houses in Brisbane, it's kind of more streamlined. There are ways to get approval faster. So no matter what you guys say about how planning is in Queensland, come to Sydney. You're shocked. Like, it's crazy, the stuff they make up. I've got some war stories, like things that have happened in the past, and I'm like, I'm never doing a project in Sydney. I'm only now doing my first DA for the very first time, like after how many years? It's only because I live there. Like, I have to. It's my PPR. But otherwise, I'd avoid it. Yeah.
So with a rooming house, so basically there's certain rules and regulations. Obviously, I'm assuming that you got to build to. But if we have the viewers that just think about, okay, so if you think of a traditional house that has one kitchen, one living room, and 4 or 5 bedrooms, right? Like a larger home. Basically, what you're doing is building something similar to that, right? But you can actually rent each individual room legally for a higher dollar amount than you would be able to just rent it as a regular house to a family.
Yes. The key word there was legally.
Yes.
Right? We want to follow the rules. We don't want to break any rules. And that's why that's the appeal of rooming houses in Queensland. So we're fully compliant. We get the 1B certificate. I think it's the Form 12 or something like that. And we can take that to the insurer, and the insurer are happy to insure this asset. So it's something that's scalable. And as you said, it is something where we can actually rent to individuals or separate individuals, multiple tenants, and everyone kind of keeps themselves. There is a common kitchen. However, it's not really, they don't really use it because single occupant, you're not going to cook up a meal for yourself, and there's always a kitchenette in their own studio anyway. So yeah.
This is a 2-day property development event in March on the 7th and 8th at the Mondrian, the newest luxury hotel here in Burleigh Heads on the Gold Coast. You'll see how developments are found, how they are funded, and how they are actually delivered. But don't ask us if it's worth it. Check out the people who've already been doing it.
Have you got any partnerships from here?
Yeah, absolutely. We are JVing with a weapon from Melbourne and building a really awesome relationship with him.
As usual, all the Unemployable events are fantastic.
It's just amazing. The community's great.
My mind is a bit blown by the end of the day. Lots of information, and it's been awesome talking to everybody else.
I've just put in an offer today, first offer. It's good to take that first step. We'll see where it lands. I think it could be a pretty good deal.
A lot of people I've done business with in the past, I found that they've overpromised and underdelivered, and I feel it's the opposite with Unemployable.
I had a really, really good time, great connections, met some awesome people.
They're getting me in the room, like with people who can help me and in making introductions.
Everyone's just on the same playing field and everyone's out there just to help each other and have a bit of a conversation.
Got so many connections and I'm happy to be part of Unemployable.
It's hard to put into words what happens when you get yourself in a room with like-minded people. You just walk on, you can feel the energy, you can feel the momentum. Everyone I spoke to today just had the biggest dreams, the biggest vision. It's so inspiring.
Some of those people that you've just seen have made offers. Some have found partners. Some are actually doing real deals right now. And they all say the same thing. I'm glad I went. If development is on your mind, this is the weekend. You need to stop waiting. Click on the link below and let's start developing together.
Yeah, and what's driving the demand for this type of housing at the moment, right? Like obviously we know that there's a housing crisis at the moment, but where's the demand coming from, and who's actually renting these I guess rooms out, right? Because I know there's a lot of studio apartments that you can rent as an example in an apartment building, but the rooming housing, I didn't really hear about it until we really started Unemployable Property and really started to get a better understanding. I've heard of people going, all right, I'm going to rent a property out and I'm going to get a sublet clause, or sometimes not have a sublet clause. And I'm then going to rent it for $600 a week. And I'm going to then rent it to 4 college students or 4 university students illegally, right? Each room for $400 or $500 and go on their way. So where's that demand coming from, and why are people still doing what I just explained?
So the typical tenant are working Australians. We don't target students. Generally, students have their government subsidized accommodation or something. We tend to avoid those places because they're really expensive, because they're appealing to people who want to operate or build student accommodation. So it's just general Australian. We used to think that it was women over a certain age, changing demographic of Australia, but it's actually people across the board. Pensioners actually really like it because there's that set utility charges are built into their rent, so they don't have to worry about that. They know it's consistent. We've got young Australians who are moving out of home for the first time, and generally it's more affordable than them renting somewhere else. So really what we're pitching, like where we're finding the demand, is from those who don't want to share a house with somebody else, those share houses that you just referenced. So they don't have to share the bathroom, they don't have to share the kitchen, they have their own private space, studio, whatever you want to call it. So that's generally the appeal for people. The utilities, the bills from a financial perspective, and also that privacy, and you have your own amenities.
So each individual room has its own ensuite?
Yes.
And it has its own kitchenette, like you said prior.
Yeah.
And then there's one main kitchen.
Yes.
And is there still like a communal living space?
There is, but we used to, when we started this before, the model's always changing. We're just optimizing based on market demands, right? So when we first started, we'd have a decent sized living area or like a dining area. Now we're actually reducing that. We're reducing it further and further because people don't really want to talk to that's why it appeals to them, because they're not looking for a frat house. They're not looking to make friends with their roommate or whatever you want to call it. They want that privacy. So that's why the common areas are getting smaller and smaller. Yeah.
Yeah, the yield side of things, obviously they've been pretty popular with a lot of self-managed super funds. Are you finding when you're on selling these, is that your main target market, would you say, or just general investors? Like, what are you finding is the most demand?
So from my model, we don't actually have, only one of our clients have actually sold theirs. Everyone else is kept. And I'll be honest, when we first did our first 2 with me and my dad, when I convinced my parents to do one with them, he said, okay, we'll do 2, but we're definitely selling 1. We might sell the second one. But once he started getting the rental income, he's like, I'm not selling this. I want more. So that's how it kind of starts. No one ever really wants to sell if they can avoid it. So only one client has actually sold. However, it's my job to be aware of who's buying this, it's just so we know what's happening, the end value product. SMSFs, a lot from southern states, but also local SMSFs are buying them as well. Generally, there was a few cases where people are buying the SMSF, but they actually run a trade or service business and they want to expand into Queensland and like, oh, hey, this is a place that we can actually rent illegally to our employees, even, stuff like that. So there's been multiple types of buyers, but mostly SMSFs. Yeah.
Are you finding the bank vals are stacking up at the back end for when you're building a portfolio? I know early days, and I don't know what it's like now. Are the banks are they valuing it on a cap rate yield type perspective, or how? Obviously, there's only a few insurance companies, I'm assuming, that get their head around it. But how are you? Is it a model that you can get that equity uplift and then go again, or do you find you need to, in a perfect world, roll it in with a small subdivision, for example, to then get that equity piece so you don't get stuck,
So when we started, when we started, it was just cash flow. That's what it was. But now the asset has evolved. It's now become a investment stock, which means that it's worth more on the back end once we finish it. And we're talking about 30%, 35%, which is pretty decent, for any development, small development, that's pretty good. And the worst case scenario is if you couldn't sell it, you're still getting positive cash flow. So it kind of covers both sides of that, equation, cash flow and manufactured growth, which is why it's so appealing now. But when we first started, that wasn't the play at all. It wasn't a speculation play or manufactured growth play. The banks are now more accepting of this asset class. They weren't before. We were kind of circumventing that by putting them through as resi finance, and then the values would rock up, when we finish, and go, oh, this is a weird layout.
But they older children.
Yeah. Exactly. They're like, what's this? What are your 5 doors? But they didn't really care too much. But it's been a few years now, and values are clicked on, and they've been told by the lenders, hey, this needs to be commercial, and that's where we've shifted to. But this year alone, there's been maybe 6 new lenders in this space. So this is going to grow, and it's going to push the price up as well.
Are those lenders big banks, or are they still a second tier lender? And being a commercial, looking at it as commercial, you're still a 20% deposit to get into these minimum, are you?
So as resi, it had to be 20. It was 20%, but it was just based on comparables. So you were paying a little bit more because your valuations were a little bit higher than everyone else, as in your TDC, your total development cost. However, now because it's commercial, sorry, your question was how many lenders there were. It used to be Westpac used to be the big. Can I name them? No,
of course, yeah.
So Westpac, they had a big chunk of the market. None of the other banks really wanted to touch it, specifically ANZ. They're anti-build to rent at that time. Now they're entering in the market because they realize they're missing a piece of the pie. CBA is doing a bit. NAB's doing quite a bit as well. But Westpac is the most advanced. Now it's all these sick, but they have higher criteria, as you guys know, right? So they're the more conservative parties. And look, it's not set in stone. I haven't validated this, but they even told me, because I deal with Westpac Commercial, that they were going to set up a team. It's like a division for this asset class. So this is only growing, build to rent. Now that now there's all these second tiers and third tiers, and the banks are willing to play. Whereas back in the day, we couldn't even tell them what we were doing. We're just building a house, and it just happens to have some walls, some questionable walls around, and that's it.
How did you find out about this asset class? Like, obviously, at the moment, a lot of people, you do rental flips, you do small scale development, you do a bit of a land sub 1 into 2 and these types of things. And obviously as you grow and learn more, you do stuff like what Shannon and Carson are doing, and what I'm doing in the development space as an example. But when you first started, how did you actually get into this rooming housing sector?
So I'm a big advocate for education, specifically in property. I think it's the highest ROI, return on investment, to pay to know what someone else knows rather than figuring things out from scratch. So I joined a lot of different education programs. I've joined 2 this year, just since I got back to Australia. So rooming house was something that was discussed, but I had to figure out how to do it, if that makes sense. So I made the effort of, calling people up, visiting Brisbane, and it took me about 6 to 8 months to figure out the model, if that makes sense. And that's why after I figured it out, we were able to do 4 in the first year, right? Like straight off the bat, let's go. And it's just been scaling up since then.
Can you build these anywhere, or is it specific areas from a zoning perspective? So if we get a lot of people that listen to these podcasts that are in a lot of different situations. Some have a lot of money that want to invest, but they don't have the time to look. We have other people that have plenty of time to look, but don't have the money. So if these people are listening and they're watching you, how would you explain to them where these can actually be put? Like, can it, for instance, we're in Southport right now. We're on the Gold Coast. This is where our recording studio is. So if I just walk out of our studio, there's residential land there. It's a corner block. Can I fit one there? Can I go into Surfers and do one? Can I go into Narang and do one? Or is there specific land sizes or zoning areas that you can do it? Or is it a gray area at the moment?
You can generally do it wherever houses are, but there are certain overlays in certain councils that prohibit it, for good reason. But the main factor is whether it's worth doing. Just like anything, you can do anything. It's just it's worth doing from a commercial perspective. So infrastructure charges is probably one of the biggest factors with doing rooming accommodation. It's quite significant. So the state government set a limit of $20,000 per room.
Wow.
Yeah. So, and obviously, what are the councils going to do? They're going to set it at the highest price, which is 20,000. That's
20,000 per room.
Per room.
So $100,000 for 5-bedroom house is what it's costing in infrastructure charges.
Minus the contribution for the actual lot.
The actual existing house that was there. If
but
there
that's
was
credit.
If there was a house there.
Yeah, that was already paid there.
Yeah.
So it works out to be in Brisbane City Council about $68,000. Oh, sorry, is that right? Minus 30 something. Yeah,
Give or take minus 32.
Yeah.
Why?
Because fees. That's how the government works.
Yeah, but aren't we supposed to be solving this housing crisis and all be working in collaboration together to actually solve it?
So the same power connection, the same sewer connection,
Yep.
same water connection to the same 5-bedroom house. If it was your personal house, you wouldn't have them. And your family was in there, but because there's 5 individually rented rooms,
Yes.
it's a contribution for each of the rooms.
It's a limit set by the state government, and if the councils can charge more, they will. Why wouldn't they? Because I think there's a little bit of even though rooming house is something that's approved from the state government, it's in the planning, building code and all that kind of stuff. So it's not like they're doing anything grey. It's just the councils they're a bit weird. They want you to solve it, but they don't want it. They're doing everything on the back end. Like from my experience. Okay, I'll give you guys an example since you guys want, the challenges. Yeah, you want the real stuff. So I've done it in my very first 2. I did it in within 8 kilometers of CBD in Brisbane because, why not do it in the best place you can?
Yep.
However, because it's in a nice area and that council, that ward, or you want to call it, the councillor that represents that place is a bit of a NIMBY, anti-development, actually famous for being anti-development. And we got taken, once we did what we did and we're providing housing and all that kind of stuff, then the neighbors complained. And council crashed down on us like a ton of bricks. They even got a police court order to go to my property manager's office, like really heavy-handed, like we're bloody drug dealers or something. I don't know what we're doing. And like, geez, you could have just called us and just make an appointment. Like, what's going on? But no, they came with the police. The council came with the police, asked for the records, and walked through his office and all that stuff. And he's like, here you go. Jeez. All right. And yeah, we got taken to Land Environment Court. Well, in New South Wales it's called Land Environment, but in Queensland it's called the Tribunal, right? We got taken to Tribunal twice.
Is this after you've built or prior?
After.
So you built the rooming house, there's
built it.
tenants inside, and then
Yes.
you get taken.
And the tenants were being hassled. They were notes were left and like telling them, oh, you're not living somewhere that's approved and all this kind of stuff. But we've been approved. The certifiers approved it. We've got the, Form 12 or whatever it is, the 1B certificate. So it's weird. So we went from the bad guy to the good guy because there's a housing crisis. But at the same time, so publicly they'll say this, but at the same time, they're still making inquiries. We've beat them. Look, I shouldn't say beat. We've deflected them twice in tribunal, but they're still coming after us.
Do you feel? Yeah, then that was my next question. Do you feel that there's still a lot of scrutiny in this space?
There is. It's sort of like you kind of want to do them in places where, and look, it's just another level. It's to a lesser extent what I went through in Sydney. Because you can do them in Southwest Sydney, you can do them Northwest Sydney. We're talking like, where it's needed most. And the councils, because it's so political, they will fight you tooth and nail. They'll take you to court. They don't care if they're spending their ratepayers' money because, I don't know, there's just some kind of weird thing where they don't want this, even though it's needed in their own, council. But someone needs to provide it, right? We're not talking slums here.
What don't they like about it? Is it parking ratios? Is it the people that are in there? What?
It's the asset in general. It's the asset. I don't know why there's a stigma, but they just don't like that you're renting to individuals. I think it's because it's linked to boarding houses. So New South Wales boarding houses are linked to ex-cons. That kind of stuff.
It is real. It is a stigma, and
yes,
I see their side as well. Don't get me wrong, right? Cool. At the end of the day, if they just allow this and let anybody doing this, not every developer is going to be like Michael Lin, right? There will be people that will go rogue and build the wrong thing and bring people in that they shouldn't be bringing. And the last thing you want, is living in a nice neighborhood, right? And then have a rooming house beside you that all of a sudden some developer doesn't give a shit. They're just putting anybody in there. And that'll create problems. So I can understand that, but there's definitely a balance that needs to be put in play here because this housing crisis, I want to ask you about it, right? Like, do you feel like we're in a period of time where this is just going to work now, like any of these other schemes that come in, or do you actually feel like the housing crisis is going to get worse moving forward?
I think it will continue to get worse just because there's not enough supply. I mean, I've done how many, but it's a drop in the ocean. There's a huge demand. I mean, changing demographic of Australian population. There's so many people. We get applicants straight away. It's just
it's an issue. It is an issue. It is a major issue.
It's a national
I want to
issue.
give you an example. When I moved here 18 years ago, whatever it was, Jen and I rented a 1-bedroom unit in Surfers Paradise. And these 1-bedroom, it was an older building, but amazing amenities. It was a building called Sun City, for those of you guys that know what Sun City is in Surfers. And it was 135, 140 square meter 1-bed when they used to build 1-beds at that size. Now they're building 1-beds at 60 square meters, 55, 60, 65 square meters. And we were paying $300 a week, right? 1 car park. And back then it was not bad, right? It wasn't like, I didn't feel like it was extremely expensive. It was quite fair. Fast forward to today, and I have a friend that has a building that he's built 1, 2, 3 bedrooms plus studios. Now the studios that he's built basically is a hotel room with no car parking, with no laundry, 1 small kitchenette, a bed, and a spot for a desk. That's it. And he gets $500 to $550 a week, right? And there's people lining up for them. That's when there's an issue, right? And I am in the same headspace as you when it comes to, I don't think this is going to go away very quickly. Obviously, wage growth is an issue, and asset values just keep going up, and it's out of reach for a lot of people. And I think that there's going to be a lot of people moving forward, in my opinion, especially the younger generation that don't have help from parents or don't have a business or a job that they can actually make enough money to spend, and they will be living in these houses, right? And more people are single, right? And they're staying single, and there's more people not having kids. So at the end of the day, these people now are looking more towards experiences in life rather than going, I'm going to save for my property. Because the reality is someone that's paying that rent and earning whatever they're earning is not going to be able to buy a property. And it's sad to say that, right? But someone that's on an average wage, paying $500 a week or $450 a week, whatever it is, and we'll get into the details, for a room, right? That's $20,000 a year. Now, it's a lot cheaper than going out and renting a full house or a 2-bedroom apartment. But the reality is it's 20 grand a year after tax. And in my opinion, it's going to be a growth area for some time. And I think this is where councils are probably getting a little bit worried, because it's growing faster than what they probably originally thought. And there's a lot of Michael Lins lining up, and especially coming on podcasts, that are going to get lots of attention and then go, oh, wow, that seems good. I want to learn how to do that, right? It sparks my interest. And we'll start talking about some of the returns later in the pod on what you can get. But yeah, I'm in the, what are your thoughts, Shannon?
Oh, I think the cause of it, or the reason we're going with options like that, you don't see single-story walk-ups anymore. We don't see many of them. It's either we're going really, really high and we're building towers and we're pushing for another 5 levels and going higher to make the footprint work and get a better yield, or we're doing stuff like this where the building cost is cheaper. It's that simple in my eyes. Like, we're looking for that. The intermediate's not there. You can't build a single-story walk-up on a piece of dirt that cost you $5 million to purchase on the Gold Coast. So
yeah, that's it. I mean, we've been looking at this space for a while. I mean, like you're saying, Michael, I was looking over the border, and we met with some of the mayors over there because we're trying to be proactive. And I sat down with one of the mayors and I said, as soon as I lodge this, all the pitchforks are going to come out, because you're right, nobody wants it next to them, but at the same time, we need the affordable housing. And I said, are you going to actually support this? Because there's going to be 50 people that object to this. So we'll build it if I've got your support. But and she was like, oh, well, I will, but just make sure you put it in the right area. So, which is fine, which all makes sense. But the reality is, well, we've got dirt in scenic Ream. We went to do some stuff there, and the infrastructure charges just killed the feasibility of it. That's why everyone goes to Brisbane. Same with the Gold Coast. It's just not feasible to do it here. So, it's great that the state government came out and said, okay, let's do granny flats, because I think it was Logan and Ipswich had good granny flat laws. Obviously, New South Wales, you could rent a granny flat out to a third party that wasn't a family member. And now in Queensland, we've adopted that, which is awesome. But with a stroke of the pen, like if the councils, they sit there and slap each other on the back and say, this is great, guys. We're going to solve affordable housing. But the reality is, with a stroke of a pen, they can get rid of the infrastructure charges, and developers and mainly mum dads will actually come and fill the void. It's not the full picture, but it is a solution. So I think if they're dinkum, I think councils need to be sitting around the table and going, well, this is a viable option, and it's one of the cheapest constructions, right? As opposed to doing suspended concrete 3-story walk up. So it's a really viable option that in the marketplace.
They could quickly increase supply very quickly across the whole state. Like, seriously, like you said, just a stroke of the pen, it would change things. It would incentivize people, because the government can't be relied on to provide supply. Come on, like, that's not their job, right? It's private investors such as myself, a developer. If it doesn't make sense, if you're going to lose money, no one's going to do it. I can't find clients or investors to invest with me if it doesn't have a certain level of return, right? It's a must. So, but there's some sort of hesitation on their end how do I say this? I don't think it's about the money. because they are throwing money at this problem. What's the fund? Like billions, right? Billions of dollars, whatever the housing fund is. Last year, even they were giving, I think it was $300 million a fund to pay off infrastructure charges in Queensland. It was a Queensland fund, and
They got
it
soaked up.
soaked up so quickly, right? I was like, we have to be quick. You have to be like ready before the day open.
We were talking about lodging for
Yeah.
one of our projects.
Yeah.
A few weeks went by and it's like, oh, sorry,
It's
the
done.
gates are closed.
Oh,
Like, oh.
you had to lodge it in that week.
Yeah.
The day, because it's free money. But the thing is, they were doing it for projects that were already in progress. Like it doesn't make any sense. So there's a misalignment with the government policies and reality. That's the core of it. Yeah, I think they do want to solve it, but they're getting the wrong advice.
The cogs move a lot slower in there than what we're able to. We move a lot faster, and by the time they catch up, it's already the site's already developed or the DA's already done.
That's right. You can't wait.
Yeah.
What's interesting about this type of product, right? Like depending which side of the fence you're on, there's really two types of clients, right? You've got a developer, and you're dealing with, obviously, if you're building it to rent it, you've got these tenants, right, that you're dealing with, which are the end users that are renting them. But you also have the investor on the other side that is always looking for a return. And returns, in my opinion, are becoming harder and harder to come by because margins are being shrunk quite heavily because of taxes and infrastructure charges and the cost of construction. I know Shannon and Carson have told me off camera, they used to cut up blocks of land for X amount, and now it's, 2 to 3 times that amount. And there's a point in time where things aren't feasible, right? And if a project's not feasible, that means there's another 20 lots that Shannon and Carson aren't going to be cutting up to actually provide, right, to the public so they can go and buy it and put a house on. So this is a unique time as well, because I feel like the rooming housing is still new. It's still fresh. And there's such, half decent returns to be made still, right? So you have a lot of people out there that are looking for these investments. I was talking to someone recently that built a property, an NDIS property, and he was just explaining to me, I can have 2 NDIS clients in there, and this is how much rent you can get. And like, we're talking astronomical rents that they can get, right? To the point where I look at it and I'm like, this is unsustainable. This will be for a period of time, and then someone will come in and go, who the hell signed off on this? And they'll just exit, and then some other scheme will come. But I think this is here to stay, especially from a return point of view.
This isn't based on any government scheme like the NDIS, so they can turn off the tap. Obviously, they're going through their whatever they're going through right now. They're gonna tighten that tap at the very least, right? And but with this, we're not targeting a specific group. It's just open market. We're just increasing the supply. So rents have been increasing quite a bit over the last few years due to the housing crisis. At the same time, once it reaches, I don't know, I wouldn't say saturation, but it would go up a little bit more, and then it would pull back a little bit, and it would just stay, because there is a floor. There's a floor and a ceiling at all times for rent, right? This is like, well, why would I rent this when I can rent a 2-bedder or a apartment, a studio somewhere else for the same rent? It just, it's just, basic numbers.
Yeah, you always got the competitor around you.
Exactly. So it's always going to be an equilibrium. It's going to provide, it provides a solution at all times, if that makes sense. So, and the other thing about rooming is it's privately owned. So it's not going to turn into like a slum, because the owner would protect their asset. The owner, it's in their interest to protect their asset. They're going to fix it up. If it's damaged, they got insurances. It's not like, it's, a portfolio of how many, like government housing, whatever it is. People are going to look after, mum and dad investors are going to look after their asset, right? So they've got a problematic tenant. So there's all these factors, but end of the day, it's a solution, as you said, Carson. It's a solution.
Yeah. Yeah. What can we run through some numbers? Like let's say, forget about the development side of things for now, but let's just say you're going out there. Like, we use Brisbane because it's probably the best council at the moment to be doing this strategy. Where are you looking for? How much you're trying to pick up a piece of dirt for, and all in, where does it make sense? Like, what's the rough build cost? How much do you want the dirt for? and what's going to be the total development cost, and you said there's a bit of a 30% gap with the vals when they're coming in at the back end.
Yes. So you make there was a window where you could just buy the block of land and then just build it, and then you'd just make money for no reason, and obviously own it for
Those were the good old days.
It's only a few years ago. I did one. I think we finished December 2024. We picked up 2 sites. We picked them for a good price, and we just built it. And I think it cost about 900, and they're worth 1.3, which is crazy.
Just instant manufactured equity.
Growth. Yeah. Well, to be fair, we bought it for a really good price.
Yes.
Off another developer on the day. So my kind of thing as a developer, I have to find the best deals, obviously, for myself and for my my partners. You need to know your numbers. In terms of the numbers right now in Brisbane, you'd struggle to find a block for 500. They're generally around 550 to 6, right? And we're talking outer rim kind of suburbs, right? So those days are gone. Another way where kind of like, in saying that you could do it, let's just say you do it let's say you buy the block for 550. What's the stamp duty on 550? I don't know, 20 something.
Yep.
Just here 20 grand. So 550 plus 20 plus the build. The build's about, if it was a low set, then we're talking about 525 to 550. Depending on the builder that you go to, right? There are different tiers and all that kind of stuff as well. But let's just say 525 to 550. If you go in high set, it's going to be in the 6s. You add that up, plus your holding costs, and you have a general number probably around the 1-ish kind of range, right? And if you know on the back end it's going to be worth 1.3, well, that's sort of something very attractive to a lot of mum and dad investors. And also it's something that they can hold for positive cash flow as well. And in terms of yield, we were talking about it before, outgoings, you're looking at about 25 to 30 grand because insurances have gone up. It's not because it's a rooming insurance, it's just across the board, insurance has gone up, right?
Yes, definitely.
So if you look at it from that point of view, 25 to 30, you're ranging around 105,000. So 105,000 gross a year. So minus your, say 30 grand, you're doing all right. You're 80,000 net. Obviously you got your holding and interest and all that kind of stuff, but that's dependent on your personal circumstances.
Yep.
But it's a good asset. Compare that to whatever you're buying the regular house for, 800-900 in Brisbane, and you're getting 700.
Yep.
It's
less all the costs again.
Yes, it's not really. Yeah, this is a better asset, and the banks are really pro it now. I mean, these things always change, right? Flavors of the month, kind of thing. Right now, it's built to rent.
You think about it practically. I mean, you go. A lot of people buy a block of land, build a new house, or buy these house land packages off the spruikers and getting, if they're lucky, like a 5% gross yield, and depending on what city you're on, you'll be half that in a lot of areas. So to be grossing 8% plus, that's very attractive. And would you say the capital growth is on par with like the standard, or do you feel
capital growth is I can't keep a pulse on it. It's in what's the word? What's the opposite of free fall? The other way, upwards. I can't, I'm always shocked when I find out someone just sold. A friend just told me who, I helped, she was looking to sell her rooming because she has other deals, and she got the agent got it on the market in 2 days, right? And I think they just sold for 142.
Wow.
A low set.
This in Brisbane.
In Brisbane, North side.
Yeah. I think we all got to remember it's really the underlying factors, the land that's going up in value, right? Whatever is on it is on it. And what you're putting on is giving you a better return than it is getting $700 a week is a lot better, is a lot worse than, getting $2,000 as an example. Now, what are some of the costs? So for some of these standard rooming houses, what are the tenants actually paying? What's the range?
They're paying between $410 to $450. There are some parties that are getting higher, but they've spent maybe a lot more in the fit out, or they're in very specific locations, or they're I don't know, they're just aiming for higher rents for the sake of aiming for higher rents. But I'm quite conservative. My range is 410 to 450.
And if there's an investor, put your investor hat on now, and you're out there looking for an investment property. You're not a developer. You're not interested in building these things. Are they valuing? From a bank perspective, right? Can they approach, any of the big four banks or some of these 6 new banks that you were talking about and get a standard kind of rooming, housing, residential 80% LVR loan? Is there 90% LMI, loan mortgage insurance? Are they looking at that, or do they look at this more of a commercial kind of lend?
It'd be a commercial lend if it's complete.
Yeah.
Yeah, it'd be a commercial lend. They won't, because they would have to send a valuer there and they'll see clearly that this is a multi-rental.
Yeah.
So one of my clients just last night texted me. He just got his loan through one of these banks. Actually, it was Macquarie Bank.
Yep.
It's Mac Bank. And he's paying 6.3. I was like, that's all right. 6.3% for an existing, already completed one. And that's not far off. I mean, that is actually cheaper than, Westpac is charging, actually. I haven't actually had a look in a while, but yeah, 6.3. But the LVR was 60, right?
Yeah, you got to come up with 40%.
Yeah, but that's a completed one. He manufactured that already. So he built it for he did 2, and it cost about 1.8 TDC. And he just got the commercial valuation at 136 and 138 each, right? So he's drawing down on that commercial valuation, and that's a conservative valuation. There are some that are like, this valuation game is it's just sort of like, who do you look for, kind of thing. Yeah.
Now I want to start asking some questions on, this is all positive stuff, right? And you make it sound very, very easy.
It's not easy, but it's simple.
You make it sound easy.
I just want to put that disclaimer.
Make it sound easy and simple.
When you're up to 25, it's getting easier.
So for someone from the outside in that's looking at this and going, this sounds too good to be true. I'm just going to start looking for, a 600 square meter block of land in these areas in Brisbane. And I'm going to go and try.
We're doing on 300 square meter blocks.
On 300. What are some of the horror stories? What are some of the things, right, that people need to look out for? Because I then want to explain a little bit of some of the things that you do outside of investing in your own and how you help others. But at first I want to start, getting an idea. For me, as an example, I don't know a lot about rooming housing. So what are the things that that I don't know, and those roadblocks that I would run into if I were just to go and, shoot from the hip and go and do it myself? From council, from overcapitalization, from all legalities, sign-offs, building certifiers, any of that type of thing.
So I might jump from here to there, fine. But from a planning perspective, obviously picking the right location, right council, right zoning, the right overlay. Because if, for example, you put it in a place that will trigger a DA, then council gets involved, and then it becomes more complicated. I'm not saying that's impossible. It just becomes more complicated when you have another authority that you have to,
jump through the hoops.
Yeah, exactly. Jump through the hoops. I was going to say something a little bit more rude, but anyways. But yeah, so there's that. Also, your certifier. There are actually a few horror stories right now in a very pro rooming house suburb. Can I name them? Or
Yeah.
Okay, so Acacia Ridge is like the new rooming house capital.
There'll be 5,000 people searching
can go.
Acacia Ridge the day after this.
It's overpriced now anyway. I wouldn't go there now.
Don't tell them the real good ones.
I'm going to give the current live ones, but yeah, I'll give you an example as a case study. So Acacia Ridge, typically a housing commission suburb. That's the reputation, right? Like I'm from Sydney. That's all I know. If anyone lives there, I'm sorry. I don't mean to offend. But that's the reputation that it had. And the ironic thing is the median price in Acacia Ridge is very high now compared to everyone else because of these roomings. Wow. Because of the roomings, because they've pushed up the median price. People are building them to sell there, but there are obviously people who are building, to keep as well. So that's something that you want to make sure that you're playing in a space where you're not going to ruffle too many neighbors' feathers. So that's why I do outer ring after that first experience with council. That first two, I just avoid the close to the city kind of areas because I don't want to deal with that drama. Because at the end of the day, the rent is the same. This is a really interesting lesson I had where, those first, I mentioned the first two I did, and I said I did 4 in the first year, like off the bat. So we're doing 2 out in Bold Hills, which is like the border of Brisbane, right? And we're doing them in, close to the city, Tennyson.
That's a nice area.
Yeah, Tennyson's a nice area, yeah. So the rent from our Tennyson ones was the same as the rent we were getting in Bold Hills.
Wow.
Right? So we're like, why are we dealing with this drama? It's the same kind of return. And it's cheaper. No, it's better yield because the land was much cheaper in Bold Hills versus Tennyson. So there was this window where we were picking up blocks where no one wanted to build their dream home. We were right up against the rail line, like literally right next to the train station car park. Do you know what I mean? Like no one wanted it. I don't even know how the guy got me. Like it was an off-market acquisition. He had 3 blocks and he randomly called me and said, I heard you're in the market to sell. I'm like, no, I'm in the market to buy. He goes, oh, okay, well then I've got these. So I don't know, some random person. I don't even know his name now. So yeah, that's how I found that deal. That was a bit serendipitous, but yeah, that's sort of what you have to keep in mind. The other thing you got to keep in mind is some people are bringing their personal values, not shit, just like they're forgetting that this is an asset, it's an investment product, and they build it as if they're gonna live there.
Emotional.
Yes, emotional shit. So they'll make it flashy, but the problem is when you have that expectation, you're imposing an expectation on the other end as well because you spent more money, you're expecting higher rents.
Yeah, it's setting expectations, right? As soon as you said Bald Hills and Tennyson, one of the questions I had was, what's the expectation of a tenant in Tennyson, right, paying $450 versus a tenant in Bald Hills paying $450? Because if I'd assume their expectations would be a lot higher.
Yes, we have more. We have to. There's more work involved in
more phone calls, property management.
Yes.
This is broken.
Even though the rent is the same. It's ridiculous. It
Yeah.
just blows my mind. So that's something to keep in mind, expectations. And also, you as the developer, the investor, the mum and dad who's building them for their first time, just keep it simple. If you want to, like, I'm a scale type person. I like cookie cutter type projects. I don't want, if I see something work, but not work once, it has to work a couple times, then I'm happy to copy that, and put it into my own flow, right?
We had Nathan Birch on the pod. You remind me of Nathan Birch. We had him on the podcast a few weeks ago.
Love to meet Nathan.
And yeah, great guy. Over 300 properties. What he's doing is unbelievable. We'll be launching that podcast soon. And it reminds me of him because he's like, man, all my properties, I use the same tile, I use the same carpet, I use the same paint. The guy probably has a warehouse just full of tiles and paint, because when you're managing 300 properties and doing rentals and this type of thing, you can imagine the amount of work. But it's true, right? Like this is where a big recommendation I have, right, is you need to remove the emotion from investing. As soon as you start investing and you look at it from an emotional perspective and not a numbers-based perspective, you're going to create problems for yourself.
Yes. Don't get romantic. That's what I say.
Correct. This isn't somewhere where you're going to be living, right? Don't paint the walls black because you love black as an example. And don't do certain things, right? Because what you said earlier, you can overcapitalize very, very quickly in certain areas. And you have to get a good idea on who your demographic is in whatever you do, in whatever type of development, whether it's land development, luxury development, small scale, rooming housing. There's always an end user that's either buying it or renting it. And you need to understand that demographic really, really, really well. And that's one of the things where I feel people go wrong is they start building things. They start creating businesses and building products going, I love this. This is the best thing ever, when they don't even know there's product market fit. And that's what I'm talking about, product market fit in the real estate market, right? And yeah, you got to be very, very, very careful because all your profits can get chewed up very quickly and approaching the wrong tenants. Exactly like what you were saying about Bald Hills and Tennyson, that Tennyson tenant for the same amount is going to be more of a pain in your ass because their expectations are a lot higher level.
Yeah. One of the things that I probably admire about you the most, watching, we've rubbed shoulders and, across different events over the years, but I think, you're living in Sydney, and yes, you're a rooming house expert in one sense, but I think probably your superpower is just, because we spoke about the hustle, but finding deals. You seem to be always finding a deal. I've got another one I'm negotiating with. This has come to me off market. What tips can you give to someone out there, a budding developer? Because one thing we haven't really spoke about, you're doing a lot of these as subdivisions. So you're not just doing a rooming house, you're doing a 1 into 2, a 1 into 3, 1 into 4. So you're getting that upside with the capital growth, which is what I love. So, I mean, we've spoken about rooming a bit, but the reason we talk about it is because if you're doing a 4-lot subdivision and you're selling 3 and you're keeping 1, in my eyes, just to build your portfolio, don't just build the house, build the rooming house. Yes. And some people, the rooming house is the strategy, but I like it in the sense of, okay, we want to build a portfolio. I mean, Shannon and I have been selling everything and just doing bigger and bigger deals, but we need some cash flow at some point. But I love, your approach to things. So can you give people some tips on how do you get all these deals coming to you? Is it just how are you incentivizing agents? Are they just, I know you're buying them coffees and you're sending them gifts and you're doing all sorts of things.
Yeah, I'm bribing them.
Yeah. Where does the deal flow come from?
So I did think about this, prior to coming today, and I had this. It probably didn't relate to people. I'd always say that every time I come to Queensland, to Brisbane, I get leads. I don't know what it is. That's why I love Queensland. I love Brisbane. Every time I come, I make money.
Because we're deal bankers at the state, mate. We love doing deals.
There's people are open to doing deals. Whereas in Sydney, everyone's just very like, "Who are you? What do you want?" kind of thing. Whereas in Queensland, you can just go up to someone and just have a conversation, which is really great. But I think it's probably mindset, because the reality is I only come to Brisbane 3-4 times a year. That's the truth, right? I try to come as minimal, because I live in Sydney, I don't want to leave my family. So I'll come in for a day, I fly in and then fly out at night, Now I do overnight because it just takes too much out of me. But what I think I do is I'm always looking. I can't turn it off, if that makes sense, which is a good thing and a bad thing. So wherever I'm going, I'm looking around. Even when I was just parked my car outside, I was like, oh, this is pretty interesting. I wonder who's making money here, right? So I'm always asking whoever I'm talking to, whoever I'm meeting, I'm always asking. So, whether it's a town planner, a new town planner, or a new agent, whatever, I said, so what are people doing? Who's doing stuff? Who's active right now? The question I'm trying to ask is, who's making money? Right. And sometimes you can ask that directly, sometimes you can't. You just have to be, just be clever about it.
What are people building?
What are people doing? Because if they're not making money, why would they keep doing it? Why are they doing it right now? We're not talking about something from a year or 2 years ago. We're talking about within a certain window. So, it's really easy to find out what people are doing. You just go on Planning Alerts or Development Eye, Queensland, to find out what people are doing and all the applications going through. And yes, you have to kind of filter out what's doing what's the old project that they purchased ages ago, or what are people actively buying now to add to their pipeline. But the main thing is, the reason why I'm able to get deals, Carson, is because I know the prices. I'm not no degree, no qualifications. I'm not a town planner, I'm not an architect, I'm not an engineer, I'm not anything. But what I know is I know numbers. Not numbers, I'm actually shit with numbers, but I know what the prices of things should be. I know what the range is. So if anything pops up that's below, well, obviously that's a deal. That's just common sense, right? You just know that's a deal. But the other way that I'm attracting deals is, yes, as you said, personal relationships. Just be a person. A lot of agents, I remember at the beginning of the journey, you'd hear this stuff. Oh, you do letter drops, you have your network of agents, and it seemed far-fetched, like something that you can't build. But it is actually really surprising how fast you can build rapport with people in just a small window. Like, just call the agent once a week, once every 2 weeks. I don't mean hassle them. I don't mean, take them to lunch every second week. I just mean, hey, how are you? Just wondering if you have anything I can look at. That's it. That's it. That's all it is. And then you might have a conversation once a month, like, oh, you haven't sent me anything last month. What's going on? Just be a person. That's my kind of thing. But the other thing is just being open to deals. So I had one that I think I discussed with you, before. I was driving around Brisbane. I was there for the day, and I saw a property that's on a busy road, and there were tree loppers, and it was a knockdown house. It was a complete bomb of a house, right? And there were tree loppers. And
Is this the one that you posted?
yeah, that's the one. Yeah. So that one was off market. No agent, nothing. I just, just there. I was stuck in traffic. It was a busy road, and I saw like tree loppers. Like, why would tree loppers be there? Like on an old house like this. Stop my car, cross the road, talk to the tree lopper. Like, hey, how are you? Da da da. And why is the owner cutting the trees? Are they selling the block? Are they preparing to sell? And he goes, oh yeah, they're preparing to sell. Oh, awesome. Can you pass on a message for me? Yeah. And he's like, yeah, I'll pass on a message. And I passed on a message. And then I, reached out the third time. And then the vendor came back to me and said, oh, you're persistent. That was a Facebook message, because, you got to try every angle. And yeah, she's like, oh, okay, yeah, we are looking to sell, and we did a deal. No agent, nothing. And it was a great deal. It was $300,000 below market, in my opinion. However, from her perspective, I was 200 grand above what the agents told her it was worth. So it was a win-win
But
scenario.
you knew the value in it, right? The
I knew the
agent's not
value.
looking at it going, you can put a rooming house
Well,
here.
they
You
couldn't
are
even see it was a
comfortable.
subdivision site. It was a
There you go.
4-lot subdivision.
Yeah.
Right? So around the corner, someone paid 300 grand more than me, plus stamps and all that kind of stuff.
Yeah, I think the other thing I'll say to everyone as well is, as small developers, one of the few advantages that we have to the big guys, I mean, they got the economy of scale, is speed. They got to have 5 meetings, got to get everyone in a room to make a decision. We can look at something, and if you've done your market research, we make decisions on the day. Like, I saw one the other day, I saw it, got my team over it within an hour. We got an offer on it, within 1 or 2 hours. Like, it's the speed that's where we can win over the big guys, and also over the mum dad investors, because they're going to look at it and they're freaking out. They're not sure at the time. They've, still going through the sold section to see what the what it should, what the values are. We've already made an offer, and it's, and so it's like you say, getting educated, knowing how to make an attractive offer, and the speed, which I know you do as well. So
Yeah, it's just about understanding the market, and understanding the market's not really that hard. You just reverse engineer all the other previous sales, like the last 6 months. It's not a year-long process. We're talking a couple hours, and you're like, oh, I have a pretty good grasp of the prices, and away you go.
I got to go ahead.
You've done enough of them now that you got the metrics in your head.
Yeah.
So they call, like you said, the numbers, they give you a number on the block, and you go, yeah, no, that doesn't work for me, thanks. You're like on the phone instantly.
And the people that you're working with, they respect you for it, because you're not wasting their time. You're not figuring stuff out on the fly, So I just they're not going to be offended if you say, oh, it's not for me, or the numbers don't stack up for me. They're like, oh, great, cool.
They're grateful you're not wasting their time.
Exactly.
So,
yeah.
With these rooming houses, for instance, if you had a block of land and you could put a duplex on it, as an example, could you have each of those duplexes as rooming houses, or are you only allowed 5 per actual block of land?
So that's something that
Am I on to
happening.
something really amazing right now?
You are, but you're like a year behind.
I am.
Yeah. But yeah, people are entering that space where they're doing multi-dwellings, and they're turning into rooming as well. Right? So that's sort of not so streamlined in terms of, I can just go to the certify and get approval. If it was just a normal house dwelling, it's a different
That'll be a development application.
It'd be a development application.
Now, so you mentioned, for the people that don't understand, development application and building certifier, building approval, just to quickly educate them. What's the difference, for instance? And I'll give you an example. Block of land, right? That that you can be zoned for a duplex. You got to go through council for approval, which is called the DA. You get a development application, get plans stamped. Yes, you could build this on this. Same thing, infrastructure charges, this and that. With you, you actually don't do that though with your rooming housing, correct?
That's right.
Yeah. So what's the process for the rooming housing? So, and to give you an example, that DA in Queensland, right, could take anywhere from 4 to 6 months to get from you buying the property, from you actually, putting in your application. So with you, you buy the property. What do you do next? And what's the time frame from you actually starting the project?
So it depends if subdivision's involved. Are we talking about no subdivision?
No subdivision. You found a 300 or 400 square meter block of land. There's a house on it. All right. I want to knock it down and I want to build a five-bed rooming house.
I have an example.
Yeah.
And it just happened 2 weeks ago, but I don't want to skewer people's expectations.
No.
Is that okay? Like,
Yeah.
yeah.
No, that's
like
fine.
again, I've done
Of course.
25 of these.
Yeah.
I've got double.
You've got the experience.
I've got the experience. So don't compare your result to mine or your expectation.
You're in the 9th inning.
Yeah, exactly. So I picked up one, I think it was 2 weeks ago. It was like a Wednesday. It popped up in the morning, jumped on it straight away because I knew it was a good buy, and got the contract signed under contract. Unconditional offers as well because it was just clear block. It's not titled yet, but it's going to be. It's in the process of plan sealing, so ticking all the boxes. And I contacted my broker, I contacted my builder, and basically put the whole deal together. So from acquisition to planning to design to financing in 3 days. It's a locked-in deal. 3 days I put that one together just because the stars aligned for that particular deal. If there's no planning, as in no subdivision involved, you can act really, really fast. Most people though, because they don't have the experience, they're gonna get in their own way and add like 3-4 months to the bloody process.
Yeah.
Adding stuff and looking at different designs. I'm like, first design he sent me, yep, that's it, done.
This is why I'm asking, right? Because people can overcomplicate things, and time is of the essence. Like I do a lot of built form stuff, right? So I'm going through DA processes, and it takes time, right? You're dealing with multiple consultants. One consultant could be busy; they take an extra 3 weeks, and you haven't even lodged yet. That's just to get the documentation correct. Then you got to lodge. Then you got to wait for council to come back, right? With any, request for informations and these types of things that can drag that out. And then hopefully you get a stamp of approval. Then you got to get a building application done, and that's a whole other process. And then all of a sudden you're starting to build on site. But that could be anywhere from a 8 to 10 month process, depending on what you're doing on a smaller scale development. So would I be okay to say that if I found that same block of land that you did, I could get that, like, if I had the finance sorted, right? Say I'm paying cash, right? I have the cash ready to go. I could get that started within, if I had a little bit of experience, 1 month, 2 months, 3 months. If I had a builder lined up, I've got the cash, I've got a building certifier, roughly.
You can get it done in a month.
So within
I said, I did mine in 3, so 3 days.
So within a month, you're on site and you're demolishing.
Oh, as in starting?
Yeah.
Oh, no. Because
the
building
building
approval.
yeah,
Building approval will take at least 4 to 6 weeks, right? Depending on the certifier's workload. So, you won't be on site. However, the build is, because this is, as Carson mentioned, is a simple build. It's not like super complicated, So it shouldn't take more than, say, 6 months to build. However, you got to give a buffer to the builder and all that stuff.
But I just want to dig a little bit deeper just with the building certifier and DA.
Yep.
Right. What does a building certifier do? So for instance, you have the plans, you went to the architect, tick, I like it, it's within the zoning. You go to the building certifier, you send the building certifier the plans. He's busy, so it takes him 4 weeks to look at it. He looks at it and says, Michael Lin, this is an amazing design. You're an expert. He signs a bit of paper. He signs a couple forms. He sends it back to you. Then what?
So,
within reason.
We'll take a step back.
Because there's 2 separate
Yeah.
avenues to go here, right? Like
Yes.
duplex over here, that's the DA application, all the consultants that need to be put in place, or you go down this road.
If you go to DA, it's going to take you significantly more. Like
in New South Wales, forget about it. In Queensland,
yeah,
for small scale development, you could get DAs out within 6 months here.
yeah, that's still 6 months.
Yeah, no,
To me, that's long.
Of course, you
Yeah.
can get it sooner, but
Yeah.
then that's why I'm trying to educate the person that's listening, going,
Yeah.
I want to act fast.
Mm.
Maybe that duplex, development is not for me.
Mm.
I'm going to start looking for a block of land.
Yes.
Or I want to start
Yeah.
working with someone like Michael.
It would take like a month and a half for the building approval to be processed, because there are, little bits like, engineering, all that kind of stuff. And once that's done, then the builder can obviously start to, can break ground. So it's all subject to, just keep in mind we are, there's a bit of a labor shortage in the construction sector. So yeah, but it is not as hard as it has to be. Like
it's a lot more streamlined.
It's more streamlined. That's why
you
I
do
love
is a lot more streamlined.
A lot more streamlined than it has to be. People are just adding steps for no reason. That's the problem. That's the significant thing. That's the one thing that I would say that in this rooming space, people are actually their own worst enemy. Yeah, because they don't know what they're doing. Yeah. They don't have that guidance. Yeah.
Now I know that you've been, Shannon and Carson have been discussing this rooming housing stuff for quite some time, and we know what you do, but I want you to now explain. So for those of you guys that are out there listening to this that are quite interested in this space, right? You can go out there and learn about it yourself. You can go on YouTube and you could do courses and do what you need to do. But what Michael also does is he kind of holds people's hands through this process using his experience, right, of doing 25 projects, which is 125 rooms, right? So plenty of experience. He's buying properties on the day and getting, plans and whatnot done within 3 days, like this last one. And he's driving on the side of the road and buying properties that same day, is because he has the experience and he has a confidence to take the action to get it done. And I know that there's a lot of people that listen to this that have a hard time doing that. Even knowing everything and educating yourself and listen to every podcast, but taking action is a different level of thing if you don't have the confidence. Now, I want to get you to explain to us on the panel and obviously the audience as well, what does that entail and what does that look like?
So it's a service that I haven't really advertised.
Yep.
Right. But I do understand the need, because this is a niche product and there's really not much information out there. The only people who are putting out the information are people who are selling it to you, off the plan or whatever it is. And it's not really information of how to do it yourself. There's no course out there. There's no rooming house.
So this is for people that don't just want to go buy it as an investment property, right? We're talking about people that actually want to come in and learn to be the developer. So to go and find the block of land for 600, 700, 800, whatever it is, 500 grand, understand what it's like to deal with the architects and building certifiers and actually doing a project by yourself or with a JV partner. So this isn't for someone, again, that's just looking to buy one rooming house, give it to a property management company and buy it as an investment property. This is from a development side.
Yes, there's a time and place for those people just buying to add to their portfolio, but this particular case is for people who want to do it themselves. And I've just seen so many people who've done it themselves and done it in a really difficult and expensive way.
Yeah.
So that's what this service is. It's a done with you kind of service. I'm not going to do it for you.
Yes,
because you need to
get your hands dirty.
Yeah, you need to get your hands dirty, and I think it's a good learning process as well, because this could be a thing for you. When I first started this, it wasn't a business that I was trying to get into. It was just something I did for my family because they wanted cash flow. And now it's become a business for me.
It's the training wheels, like exactly. We didn't realize early days, but having the right team of consultants, I don't know how much money we've blown on having the wrong planner, the wrong engineer, the wrong, private certifier. It's just so much slower. They might be okay, but they're they're busy. You know the guys. You've gone through and had the pain, and now you've got that team and the right builder as well.
There's one crazy story right now. I forgot to mention it earlier. Sorry, there's 2 builds happening Southside Brisbane where the builder has gone bankrupt because they're like, oh, that's an easy build. But there are certain intricacies about this particular niche that their certifier wasn't aware of. And when the certifier got the plan, they didn't know how to sign off on it, so they refused to sign off on it. And the builder didn't get the building approval, started too early, and that's literally 2 of them that I know of. I'm not even asking around. So I was like, wow. And the builder's gone bankrupt or they've run away or something like that. And the client's just left holding this, this skeleton frame site, and they're like, oh no, it's exposed, It's horrible. That's hundreds of thousands of dollars.
And these are the things that you read in the paper, right? These are the stories that you see on the news, on a current affair. And this is why we're trying to educate, obviously, you guys as an audience more and more by bringing experts, like Michael, in on a certain specific topic, because the reality is there's so much noise out there, right? Every second ad is an ad that's targeting you to buy something. It's a course, it's a program, it's these types of things. But with us, we literally show up here every week bringing guys like you on, and we've seen how much value that you bring to the community, and you're posting, and it's greatly appreciated. And obviously Shannon and Carson have known you, for a little bit of time and built that relationship with you. Hence having you on, because I am a massive believer that it's not like I'm a beaver. So I'm a believer. I'm a massive believer that it's a great shortcut, right, to get what you want very, very quickly. Because the thing is, time is everything. Like if it takes you 12 months to learn something, guess what? In 12 months, that block of land is worth more money.
Market's moving so fast.
It's unbelievable.
The blocks I picked up just like a month ago, the last trip I came to Brisbane, they're like 50 to 70 grand more. I can't even buy it, like even at that 50 to 70 grand increase in price.
But what happens is you buy something, right? You buy something for a block of land. You pay 50 grand more than the other guy, and then all the neighbors then want 50 grand more, and then somebody buys it, and that's what happens, right? Like everyone just thinks now that their property is worth more, and there's always someone that's going to come in and buy it. Yes, there's always someone that is going to come in and overpay for something, right? That they think it's a deal because they're going to do a rooming house and make all this money when they're not educated. And this is where Michael could come in and help people open their eyes up a little bit, and making sure that the deal that you're buying, right, isn't going to be a dud, or you're not the one that's holding, the hammer to the skeleton, to the framed house where the builders just went broke on, because there's plenty of horror stories on that as well. But Michael, Carson,
just before we wrap up, just one last question with the subbies that you're doing with the roomings. We like to give people kind of real and raw numbers as well. Are you comfortable sharing like one in 3, or I think you mentioned a 1 to 4 that you picked up off market?
Yeah.
What can you run us through the time frame, the DA time frame of that, and I'm assuming it's got all road frontage. You're not building any new roads in. You're literally just breaking
infill
lots, putting in the VXOs potentially. What does it cost to do a subdivision like that? What's the civil construction worth? Just thumbsuck numbers or around for people, and the infrastructure charges and the like.
Generally, we're allowing for $150,000 for a 1 into 2 in Brisbane City Council. That includes the infrastructure charges. We're talking infill here, so there are roads and all that kind of stuff. But obviously it varies depending on the site. But about 150, that is creeping upwards. Just purely from a holding cost perspective, not so much from the contractors. Yes, concrete and all that kind of stuff has gone up a lot lately,
and we'll keep going.
Yeah, it will keep going. Exactly. But it's more so the labor shortage. So contractors are taking longer to actually get onto site. So I'm happy to pay, for example, that 1 into 4. I have a retaining guy who will do it for 125 or sorry, that's per linear meter. That's a fencing, but he'll be like 200 and something for per square cubic meter for retaining. And then you've got another guy that'll charge significantly more, but he can get out there in the next 2 weeks. I'm happy to pay that. So that's been a mindset shift for me as well as we progress. That time is, I can make more money. I can't make more time. Like, like it's just, and the sooner you finish the project, you can move on to the next one, because time that you're stuck in one particular project, the price is just going up so high where it's not even worthwhile waiting anymore. Squeeze every, how do I say this? You're trying to squeeze every drop out of a rock when really you should be looking for the next, the next mining site, It's an opportunity.
And the margins, like what like ballpark for a subby at the back end? What's your target? What's a deal like when
So I only do 1 into 2, not even 1 to 3. Me personally, I would only do a 1 into 4. If it's not 1 into 4, I wouldn't touch it, just because. I did settle on one block. We purchased a block earlier this year. This is the one I got while I was in Japan. And that one was a 1 into 2. But the reason why we were happy to buy that one was because the house was perfectly on one side, and it was a nice house. Like, no work was required. So high level, if you want numbers, I think it was 930 purchase. Subdivision 150 or so, and then we're gonna do the house is obviously generating rent as this whole process continues, and then we'll probably flick the house for about 850, right? So then the land component, we'll get it for below market, and then we'll build a rooming house on that site. So in that particular scenario, yes, we'll do a 1 and 2, but I generally avoid 1 and 2, like those. It's just economy of scale is just ridiculous at the moment. So we have to do at least 1 and 2, 4. It's not so much the subdivision cost. The subdivision cost is not cheaper. It's more so the land acquisition price. And my kind of thing that's worked for me really well since COVID is I buy sites that are not just below market, or at the very least, at market, but there's value there. When we chop it up, usually the agent or the vendor doesn't know that that's actually a subdivision site, or that's a 1 into 3, not a 1 into 4, like that kind of scenario. So we can squeeze one more lot out of it. So the name of the game is to know more than.
And are you financing these through traditional banks, or are you using private lenders? How are you funding some of these?
So, Carson's one of the first people that shared this with me, that he's going through private financing. And I was like, why would you pay more? So there's a mindset shift as well. We are paying private now, just because, like, it's just.
So am I. Shannon and Carson have taken us to the dark side.
It's so much cheaper, than paying a partner or a client. Like, it just doesn't make sense to have that limited mindset. Yeah.
Agree. Michael, thank you so much for coming on. I know that you flew all the way here for this podcast, and you not only did that, but I'm sure you're going to find a fair few more deals while you're here. And if you find one out in front of the studio, let me know so I can look in the mirror and go, you idiot, how didn't you see that yourself? And as usual, guys, please subscribe, like, comment, share, so we can get more and more people like Michael on here to educate yourselves, getting out of the rat race, make money on your own terms, manufacture equity, just like Michael's doing, buying blocks and, getting approvals on them, and just the land, on some of these are worth 300-400 grand more. And I know that can change a lot of people's lives. So get out there, get amongst it, reach out, and hopefully you guys continue watching what we're doing on the Unemployable podcast, because we're going to be here every week, whether you like it or whether you don't. See you on the next one.
Hey there, I hope you enjoyed that episode of Unemployable. If you'd like to watch another episode, just click there.